Welcome back. You're watching Market Fatafat on ET now. And before we move on to the other stocks, let's hear out the exclusive conversation that my colleague Anurag has had with PFRDA Chairman Deepak Mohanty, who spoke about the performance of equity as well as debt NPS schemes. Here's an excerpt of the conversation.
See, in the 11 lakh crore, we have about 17% equity contribution. So that would be, close to 1.8 lakh crore. That is the equity, because as you know, NPS is a mixed scheme of equity and debt. So there's more of debt. So this is the equity number that you will have.
17. Sir, but if we talk about this year, especially FY24, so in this financial year, have you seen the surge in equity investment because the market has been rallying, market is on all-time high. So how equity has panned out in this particular year?
Oh, equity has done extremely well. So if you see the NPS full equity corpus, so it is giving a return, annual return of almost 24%. And since inception, that if you look at the equity component, it has given a return of 13.3% per annum. So these are very good competitive returns. And on the NPS side, that what we have done, that we have enabled 100% equity scheme. In that case, 100% meaning that through one's vesting period can invest up to 75% in equity. So that enablement has been done. And also tier 2 scheme that we have, one can even 100% equity can also be put. So we do see some switch to equity. But many of our scheme are composite scheme, equity and debt. And debt also, we have highly rated debt papers. That means in the government securities or AAA corporate bonds. Given the nature of the corpus, so more it is loaded towards debt. But the bottom line is that the equity is giving a very good return.
That was my colleague Anurag Shah in conversation with the chairperson at PFRDA. But on that note, let's keep it going with all the stocks that are buzzing in trade, either on the back of news flows and on technicals. And on the technical front today, now we're joined by Aditya Arora. Aditya, very good afternoon. Thank you so much for joining in with us on Market Fatafat. And your first stock for today is HDFC Bank. They came out with their Q3 update as well. But overall, in terms of charts now, what is HDFC Bank indicating? Where do you see it headed from here on?
Very good afternoon. I think HDFC Bank saw a stellar rise in last few days, but looking at today's pattern, seems that a lot of profit booking is there and people are taking chips off the table. So at these levels, I think there is stiff resistance at 1700, 1720 kind of levels. Until 1720 is not taken out, I feel this stock could consolidate in a tight range of probably with little downward bias. So time to enter the stock would be above 1720. Otherwise, one should sit on the sidelines.
Okay, that's the view coming in on HDFC Bank from Aditya. But let's move on and talk about a couple of names. BCL Industries, Gulshan Poly, Global Spirits, all these stocks are in focus today. Why? Because yesterday what came in was that OMCs have announced an additional incentive of rupees 5.79 rupees per litre for ethanol sourced from grain. Now, this is on top of the existing procurement price of around 66 rupees per litre for maize-based ethanol and bringing the total effective price to 71.86 rupees per litre. So basically, anyone who is using maize to or grains to blend for ethanol blending have got this incentive from the OMCs. And this is all coming in after, we had seen that in terms of sugar being banned, the use of molasses, coming to sea molasses and now grain, where they're giving incentives for other sources to be made in terms of ethanol blending, which benefits these companies. And that is why all these three stocks today have been buzzing away in trade. BCL Industries, Gulshan Poly, all of them up and away.
All right, let's shift focus then and let's put the spotlight on OMC pack. Yesterday, I did take OMCs as the pack in Market Fatafat on CLSA's report, where they downgraded the counter. Today, on the flip side, you have Citi that's come out with the note, and what Citi is saying, that favorable commodity price outlook along with markets base case of political stability in India augurs actually well for the oil and gas sector in the year 2024. They're saying the crude prices remaining between the $70 to $80 per barrel range improves the fuel marketing margin outlook as well for the OMCs, and HPCL and BPCL are their top picks within the OMC pack. Remember, we have 3 OMCs, HPCL, IOC and BPCL. So HPCL and BPCL are their top packs. They're saying the news flow around the fuel price cuts ahead of the election could pose a risk to the OMCs, but this could only be a short-term concern is what they're saying. Softening of LNG prices will further boost the gas consumption demand, and which has already grown about 15% in the first 8 months of FY24 compared to the same period last year. They are, however, preferring GAIL and Mahanagar Gas when it comes to the gas space. But when you talk of the OMCs, HPCL and BPCL are their top picks. And as you can see today, both of them holding on to the positive territory, shrugging away what CLSA had to say yesterday.
Absolutely. A bull and a bear case coming in just in 2 days over there.
Yeah, you could say that actually.
Yeah. So yes, keeping an eye on all these OMCs, but today surely holding on to gains. But let's move on and talk about the IT pack, and then top name coming in there from US, Aditya, Infosys. This one, what is the view now on Infosys? Today, Nifty IT is showing a different story, top sectorial gainer, but Infosys, do you see it going and becoming a gainer for the year as well?
Exactly, just the way you guys were talking that there isn't consensus on HPCL and other oil and gas marketing company, but probably a lot of people would agree that IT stocks are little have been underperformer, and probably there's more steam left in these IT counters. And the top contender over here is Infosys. A lot of bad news is priced in and behind us. Now, if you look at the chart patterns in the near term, the stock is strongly bouncing off the important mark 1500, wherein a lot of put writers are there, which is putting the stock, which are actually supporting the stock. Hence, the stock is one of the top gainers today in IT pack. So I think positive bias would continue in this counter until and unless 1490 is not breaking. I expect stock could touch levels of 1540 to almost 1600. So positive bias on this one.
All right, moving on, then let's put the spotlight on the power sector in particular. Let's put the spotlights on NHPC alone. And Ansh, why is NHPC in focus?
So actually the power stocks are in focus as the sector regulator CERC has released draft tariff rules which seems to have potential benefits for thermal electricity producers and hydro capacity projects as well. The proposed rules are applicable for next 5 years, and today NHPC and few other power stocks are up, likely due to the positive reactions to this draft rules. Also, if we see the chart of NHPC, the stock has hit the record high level today as well. So for those reasons, the stock is in focus today.
Surely keeping an eye out on those power stocks today. NHPC also seeing a bit of a gain and positive uptake coming in on that front.
You have other power counters also that were in focus on back of that. You had also Tata Power, you had SJVN also
which
for
was
the
buzzing.
similar news piece. Yes.
Which were buzzing away in trade as well. So yeah, you could see those charts as well. So in the power sector, power utilities mainly are the ones which are in focus as well. Let's move on and talk about an FMCG name, and Nestle, Aditya. That's the one that you picked out for us a short while ago. Dhwani picked out HUL for us, and you're telling us about Nestle. So today, obviously, that stock split that has happened and its effect from today. What do you think for Nestle? Now, finally, is it attractive to look at it? Because that
I'm sure it's looking pretty attractive. I've never seen a 4-digit number on Nestle for a while now, isn't it?
Absolutely. Aditya, what's your view on Nestle now?
Exactly. There are more reasons to buy Nestle, like good Maggie products, which always tempt us to think positively about Nestle. But looking at the chart patterns, I feel the stock is suggesting otherwise, which is little overheated as of now. So I think a little bit of profit booking is advisable at these levels until it becomes again attractive at little lower levels.
That is Nestle for you, and the reasons what Aditya is saying that it looks attractive right now. But Ankita, Kalyan Jewellers, do you think this is sparkling pretty bright in trade? And the it is actually now not, because it has given up all of its morning gains.
Almost diamonds and glitters seem to be removed from the jewelry. Seems like
looks like it right now, isn't it, Ankita? So what's the reason for this one to be in focus and gain in trade today, and now it's actually given up the gains.
That's correct. It has given up all its gains. In fact, the share had soared to its fresh all-time highs, after the company staged strong growth in quarterly business update, and clearly it has given up all those gains. But the stock was up a good 4%. The company said that the October to December period was satisfying in terms of footfalls as well as revenue across its markets in India and the Middle East. Now that registered consolidated revenue of more than 33% for the fiscal in third quarter, while the growth in its India operations stood at around 40%, led by robust operating momentum on the ground of healthy same-store sales across the key markets. Now the store addition also stood at 22 in the December quarter. Now two brokerage note also came out for Kalyan. Citi is maintaining a buy on the stock with a target price of 440 rupees per share. They are also implying a 41% upside from the previous close, and HSBC is also they have retained the buy call on the stock, and they have set the target price for 370 rupees per share for this particular counter. Currently it's down more than 1.5% in trade today.
Okay, that's Kalyan Jewellers, but let's shift focus and talk about Pfizer on the technicals and charts. Aditya, what is the view that you have now on Pfizer? Last 6 months, around a 15% return is what you've seen, and specifically in the last 1 month, seems like that pace has picked up for Pfizer. So what is the view now? Do you see it headed upwards, or maybe a bit of a consolidation could be seen?
Correct. So I think not only Pfizer, but if we look at Nifty Pharma Index, then it is picking pace in year 2024. Spotlight needs to be on Nifty Pharma this year because a lot of news is driving pharma counters higher, and so is true for Pfizer, which is forming very positive patterns on the chart. And I think stock could take off like a rocket because it's forming a rounded bottoming pattern. So this looks bullish at 4394, and stop loss must be maintained at 4160, and targets must come to 4500 to 4750. So the fundamental outlook and technical outlook both looks positive.
That's the take coming in on Pfizer, but let's take a look at what the markets are doing, because now the benchmark indices have given up all of the gains in the negative territory when it comes to the Nifty. There you go at on your screen. We've given up all of those morning gains, approximately 90 odd points from the day's highest point that we've given up when it comes to the Nifty, Vinny. Also Nifty Bank, remember that one slipped in the negative territory way earlier on in the trading session. So Nifty Bank right now, actually that sort of a fall has accelerated. 0.5% downtick coming in for Nifty Bank. Let's take a look at what HDFC Bank is doing, because remember the weightage on the Nifty Bank from HDFC Bank is quite high, and that is actually adding on to the pressure. 1% downtick coming in for HDFC Bank as we speak. Also, let's take a look at what the broader markets are doing. Is the resilience still intact over there? Because remember that mid-cap index also was struggling around the positive territory. So let's take a look at mid-cap. Small cap is almost barely in that negative territory. Mid-cap index has also given up all of its gains. So there you go, at the day's lowest point coming in for the mid-cap, for the benchmark indices, and looks like we weren't able to hold on to the positive territory at least today again actually.
At least today, yes, keeping an eye out on that. So yes, Nifty in the red as of now. 21,650 around those levels is what the Nifty is managing to trade at. But let's move on and talk about another stock that is in focus and actually buzzing away in trade. That is Jupiter Wagons. You were spoken about BEML before, Cheryl. So same reason, because yesterday around the closing trade hours, we saw that the government of India with the Ministry of Defence actually has given some orders to BEML as Jupiter Wagons, and Jupiter Wagons order win that is of around 473 crores approximately. This is for the supply and manufacture of 697 bogie open military wagons for the contract value of 473 crores. So yes, that's the breakup. BEML is what Cheryl highlighted. I'm highlighting Jupiter Wagons, and both these stocks have managed to hold on to good gains even today. Jupiter Wagons also is holding on to gains of around 2.8% as of now, 3% at one point of time as well.
Alright, so that's Jupiter Wagons also, that is buzzing in trade on back of the Defence Ministry contract. But coming to you then, Aditya, TCS, what's happening in that particular counter? Because yes, a lot of brokerages, like we were saying earlier, have changed their view when it comes to the IT sector. Have you also changed your view? Do you think the IT will be able to continue the uptrend that they have seen over the last 2-3 months?
I think TCS, one of the very few shining bright green spots right now on the screen among a sea of red, wherein every stock is down. So yes, outperformance is there on the screen, and as per the patterns, it seems like outperformance will continue for the short term, at least, let's say for 1 month or so. And I think the stocks are pretty much beaten up, and there's scope for a rebound trade. So yes, TCS looks good at 3724, and I think stop loss must be maintained at 3650, and targets come to 3800 and 3850. So the outlook is positive. And I've also changed my mind.
Okay, outlook is positive, change your view towards IT as well. So some green spot at least expected from TCS is what Aditya is highlighting. Let's move on to the next stock, and KPI Green. Anush, this one is in focus, I believe, on the back of some order wins that they've gotten today.
Yes, that's right. And actually, the stock was trading 3.5% higher today, but due to marketing pressure, the stock has dropped, but have managed to be in green by around 0.5-0.6%. And yes, of course, the stock is in focus on the back of an order win. They have secured an order for a 3 megawatt solar power project through its subsidiary KPI Green. This project falls under the captive power producer segment of the company, and the company aims to complete the order by FY25, contributing to the expansion of its solar energy portfolio.
Right, moving on, let's put the spotlight then on Sula Vineyards, and that particular counter is surging in trade today. At one point in time, the stock was trading higher by about 6% last time I checked. Now the stock is trading higher by about 10% or so, and the reason for that being, reports have suggested that Maharashtra government has actually agreed to give some tax rebate to wine makers. Remember that Sula Vineyard, basically their main base is in the state of Maharashtra, that is Nasik. So that's one of the reasons why you can see the stock actually soaring in trade. Maharashtra has approved revival of the wine industrial promotion scheme following a cabinet meeting on Thursday. This is what the reports had indicated. Under the wine promotion scheme, the government has provided a rebate of 16% on the 20% value-added tax paid by the winemakers who source grapes from the state, that's the state of Maharashtra. So these are reports that are suggesting that is actually lending support to the stock. 11% uptick coming in for Sula Vineyards as we speak.
Absolutely, 11% uptick coming in, and surely it's a season to wine and dine also, right? December just ended, everyone still is in that holiday mode as well. But yes, keeping an eye on Sula Vineyard on the back of those reports that have come in. But let's move on and talk about a real estate name, DLF. Aditya, yesterday all these real estate stocks were buzzing away in trade, and you know, they too have seen a good gain coming in over the last few months as well. DLF, an interesting story that you would like to pick out from the real estate sector.
Exactly. If one has to go for wine and dine, they must have some money, and they must take the profitable trades off the table, take the chips off the table in DLF, because I think the stock is very much overheated and very much overbought, and it is not supported by good option data. So I think at these levels of about 750, 760, the stock is facing stiff resistance, and I think this could be a multi-week or multi-month high for the stock, and from here we can see significant profit booking. So this is the time to book the profit in DLF.
Time to book profits in DLF is what actually Aditya has to say. But Ankita, coming to you, L&T Finance, why is this one in the spotlight today?
Well, yes, L&T Finance is in focus on the back of its operational updates. Now, the estimated realization for the third quarter for the current fiscal stands at 91%, up from 64% in the year-ago period. Now, the company said that it is well ahead of its Lakshya 2026 goal of over 80%. Now, the company estimates that the retail disbursements for the third quarter at 14,500 crore rupees at 25. It's a 25% rise on a year-on-year basis. Now, barring the Pharma finance, which is estimated to fall slightly to 20,000 crores, all the other retail disbursement components are expected to rise. However, the stock is down and out 1.5% in trade, despite a positive, news flow coming in on the stock.
Okay, despite a positive news flow, a bit of a subduedness that we are seeing coming in for L&T Finance. But let's talk about another Q3 update that we have, and that is Macrotech Developers. They came out with an update this morning. When you look at it, the stock had seen an uptick coming in, a sharp uptick early morning once the news came out in terms of the Q3 update. But as of now, keeping up all those morning gains, just holding on to gains of around 230 0.3% on trade. Mainly, what are the key highlights? One, the pre-sale had seen a good growth of around 12% on a year-on-year basis, 3,410 crores. So overall, it was in line actually with what the street was expecting. But they maintained their guidance. They said that for the full year also, they're on track to meet this pre-sale guidance of 14,500 crores, and this is despite reporting pre-sale on a drop on the pre-sale in a sequential basis. Other than that, collections also have seen an uptick. 2,590 crores is what the collections came in for Q3 FY24. So on the back of that, we're keeping an eye out on Macrotech Developers, or LODA as we know it.
All right, moving on, let's put the spotlight back to the two-wheeler space, because we had Dhwani who highlighted Eicher Motors as well as Hero MotoCorp, but no, Hero MotoCorp was highlighted by Ansh. But coming to you, Aditya, Bajaj Auto, how is this one looking to you on the charts? No doubt it has that one news piece that everyone is awaiting for on Jan 8th, when they will be mulling the buyback. But look at the performance of the last 6 months, 43% uptake. Do you think the stock will actually see a further upside going ahead and actually go ahead and beat the returns given by the peers?
I think Bajaj Auto itself has given great returns. I think it is one of the top performer in two-wheeler space. But right now at these levels, at about 7,000, there are significant call writers waiting to push the stock down, and profit booking is also evident today, and yesterday also stock was a laggard. So at this point, after 3 to 6 months of outperformance, I think at this point the stock actually doesn't look attractive, and I think profits must be taken off the table. There is scope for significant profit booking over here. So street is a smart animal. They have already discounted the good news in the price, and this is the time to enjoy the profit.
Time to enjoy the profit and book out of profits from Bajaj Auto. That's the word coming in from Aditya. But with that, we are absolutely out of time on this edition of Market Fatafat. So thank you so much, Aditya, Dhwani, Ansh, as well as Ankita for joining in with us. And it's a goodbye from Cheryl, myself, as well as the team who put this show together. But as we wrap down this edition, what are the key themes that you should keep an eye out on in terms of the sectors for this new year? Listen into market experts talking about this and which are their key themes. Ravi Dharamshi, Hiren Ved, Sridhar Shivaraman, as well as Rajat Rajgarya, all of them talking about the sectors they like for 2024.
Couple of the leader banks not giving any kind of a return creates the perfect base for to start thinking of placing bets in terms of from 3 to 5 years perspective. So I am again, without naming anyone, the cycle in financials remains in favor. Large lending, the private banks remains favorable. The capex cycle is just beginning, the private capex cycle. The corporate lending growth will pick up going forward.
I think the second area which we've been talking about is, as I said, if you can put it all in the bucket of manufacturing or cap goods, infra. I mean, that whole pack, power, real estate, renewable energy. I think you find companies, quality companies.
Just a year back, Titan used to be one jewelry company that used to be spoken about. I think in another 12 to 18 months, you will have dozen of jewelry companies being listed.